So in the planning stage of an audit, there are individuals who the audit firm needs to schedule, line up, and have ready so that when the substantive testing begins, sometimes this work is going to be done by others, and you want to make sure you have these people available to you, especially if they work for the client, like the internal audit staff that work for the client, believe it or not, can help you in all three stages of the audit, in planning, in internal control, and even in evidence gathering in the substantive testing. The client's internal audit staff is valuable and can be very useful. So you want to schedule them now and say to the client, I need the following people who work for you as internal auditors. I'm going to need them on these dates. So I want to schedule them now so they're not on vacation, so you don't have them assigned to other tasks. You see, because you don't want the client to say to you that you can't have my internal audit person that you asked for because they're overseas working on a different project. So you let the client know, I need that person a month from now. So have them available, please. So an independent auditor may use the work of a client's internal audit staff, even though these people are not independent because they get a paycheck from the client. We could nevertheless use them in planning, also maybe in internal control and evidence gathering, but only if we assess them to be both competent and objective. Right. Now, they're not independent, so we don't have to go there. But they still need to be objective. We need to assess them as being objective. Objective means what?
So objective is like making sure there are certain protocols in place so they're not, or limitations so they're not doing like certain things.
Well, we're going to go over what it takes to be objective and what it takes to be competent because they're two different things. And we need to assess the internal auditor to be both competent and objective if we're going to rely on them. So on slide 3, internal audit, their job all year long, they're monitoring the design of the company's internal control system as well as compliance with company policies and procedures. They're making sure the controls are working and functioning. So if they're doing that job well, we might be able to assess them as being competent. And on slide 4, their job is to keep internal control functioning at a high level. And if we can assess them as being competent, then we probably could use them and maybe we'll be able to do less of the work because they've done a lot of the work already in keeping these controls functioning at a high level. So the more they've done well, the less we have to do now, but only if we can assess them as being competent. So on slide 5, this assessment of the internal auditor should look at the competence of the internal audit department as well as its objectivity. How do we assess competence of an internal audit department and how do we assess objectivity? We assess them separately, but we have to assess them for both competence and objectivity. Competence is evaluated based on factors such as the internal audit staff's education, their experience, their certifications, and a review of the work that they've produced. Let's take a look at their work and see if we come to the same conclusion. And if so, let's see the quality of their working papers and let's make sure that they're competent. And if they are, then we can do less work because we're relying on their work to a certain extent. So if they're competent, that's good news for the audit, and that means we can do less. What about their objectivity? They may be competent, but they may not be objective enough for us. Objectivity is evaluated based on the identity of the party to whom the internal auditor reports. Who in the company does this internal auditor, who we think is competent, who do they report to? Because if they report to the wrong person, in our opinion, then they may not be objective enough to help us. Preferably, the internal audit department should report only to the audit committee of the board of directors. That's the top, the very top of an organization. The oversight, the people responsible for oversight. That's who we would like to see internal audit report to. There should be no limitations placed on the work of internal audit, which means if you have internal audit reporting to maybe the president of the company, that would be a serious limitation. Because then internal audit, if they were suspicious of the president of the company, they couldn't go forward with that type of an investigation because they would be afraid that when they report it to the president, that they're suspicious of her, what might she do? She might terminate them, right? So that would be a problem. So we don't want to see a situation where the internal audit staff reports to any particular officers. We want to see the internal audit staff report to the audit committee. Then we can say they're objective. Only then can we say they're objective enough to help us, because otherwise there'll be limits. Because internal audit, they should be able to be suspicious of anyone in the company who might be stealing, who might be part of a fraud. And if the internal audit staff has to report to a president, a vice president, some high-level executive, that wouldn't be bad news for objectivity, because then that person would be able to put some undue influence on the internal audit staff. And you never want to see that if you're trying to assess this internal audit department as objective. You want them to be able to report above the head of any officers. So this way, internal audit cannot be threatened if all the internal audit reports are made to the independent members who make up the audit committee rather than to any individuals within management. And to further ensure objectivity, internal audit should be free to do any testing that they consider necessary. And we're just sitting there looking at how the internal audit department operates and who they report to, and are they free to do any testing that's considered necessary? Would they be able to be suspicious of anyone within the company, or did management place some limitations on their work and then they're not objective enough to help us? So that's how we assess their objectivity. Competence on slide 8, we have to assess that also. Competence of an internal audit staff is assessed by the independent auditor by reviewing the internal auditor's work papers. Let's see some of the work they did this year in testing those controls. Let's review some of the work papers. What about their prior experience? Did we work with these people last year in last year's audit? And if we did, what did we think of them last year? What's their credentials? Maybe they have a certification like a CIA, Certified Internal Auditor. And the better certification they have, assuming the testing was proper to become a CIA, and if we think that the testing is reasonable for that credential, then we probably think that they are competent. They might be competent, they might not be objective. They might be objective, but we might not think they're competent. So we have to think they're both competent and objective if we're going to let them help us in this audit. So go to 9. Internal auditor may assist the independent auditor in all 3 fieldwork standards, which means planning, internal control, and evidence gathering. But as long as we assess them as objective and competent first, then they can assist us in planning, internal control, and evidence gathering. The only area that you got to watch out for in the CPA audit exam where the internal auditor is excluded from any assistance are decisions requiring judgment. Any decisions requiring judgment, you cannot subordinate that to the internal audit staff because they're not independent. And you have to be independent in order to exercise professional judgment. And we just got through saying that although the internal audit may be objective, they're definitely not independent enough to help us. Even if they are objective, we can't let them make judgment calls. We have to do that as the independent auditor. We can't allow even the most objective internal auditor to make any judgments. For example, what would be a judgment that we'd have to make that we couldn't let the internal audit staff make? How about materiality? Definitely. Good one. How about another one? Well, they've tested controls all year, right? Deciding on what to test. Okay, that's a good judgment. Deciding on what to test. We'll make that judgment, right? Now, they can help us do the test. Maybe they've already done the test. But deciding on what to test and what's critical evidence and what isn't, that's a judgment call we've got to That's on us, right? They've been testing controls all year, and if we think they did a good job, then maybe they're competent enough to help us. But now, how about our overall assessed level of control risk? Can we ask them for help on that? How should we assess control risk? Can we ask the internal auditor? They cannot help with our with the final assessed level of risk. That's a judgment call. Should we assess risk above the maximum or at the maximum level, or should we assess risk below the maximum? That's a judgment call. We've got to make that one. Now, they could help us with the testing, but we've got to determine the outcome. We've got to determine like whether the control passes the test or not. That's got to be our determination. They can help us run the test, but we're going to have to use our judgment. All right, let's go to this question. The independent auditor makes an evaluation of the internal audit staff as a procedure in the assessment of control risk. Normally, the independent auditor will look at the internal auditor's what? Both. Letter C. Yes. All right, in assessing the competence of internal auditors, an independent CPA most likely would obtain information about what? We're assessing competence in this question. A talks about management and the influence of management on the internal auditor's duties. That's objectivity, letter A. So that's important, but not to test competence, not to assess their competence. Better to go with C here. If we want to assess their competence, we want to know about the quality of the internal auditor's working paper documentation. Good. So this is a good example of a typical audit question where the wrong answers are right for a slightly different question, but wrong for this question. Good. All right, let's go on. Great question here. Which of the following may an independent auditor share responsibility with an entity's internal auditor who's assessed to be both competent and objective? So they could help if they're competent and objective, but the question focuses on here, the answer choices say assessment of inherent risk. No, that's a judgment call. That has to be done by the independent auditor. Assessment of control risk, another judgment call, has to be done by the independent auditor. Remember, the question says, which of the following may an independent auditor share responsibility with the internal auditor? Nothing to do with judgments or assessments. That only can be done by the independent auditor. And the same kind of thing in question 24. For which of the following judgments may an independent auditor share responsibility with the internal auditor who is assessed to be both competent and objective? As soon as you see judgments, you can't share any judgments with the internal auditor. So materiality judgments, no. Evaluating accounting estimates, no. No, those evaluations have to be done by the independent auditor. We'll go with D. Let's talk about a specialist and the need for a specialist. So when we're in the planning stage, one of the things we're going to have to determine is whether we need one of these people known as a specialist. Because there's certain skills that somebody might have that as an auditor we don't have. And we need this in the substantive testing phase, but we want to line this person up and schedule them now in the planning stage so that when we need them, we have them at our disposal, and they can't tell us, no, we can't help you for another month. Well, the audit's going to be over by then. We've got to schedule them well in advance, because if they really are a specialist, they're probably on a lot of people's list, and a lot of people need them, whether it be auditors or maybe expert witnesses in court. These people are, if they are specialists, they're busy people. So, for example, when would we need a specialist in an audit? If we have a client and they're a construction company and they're using the percentage of completion method, and they say that their bridge that they're building is 36% complete and therefore they want to recognize revenue of 36%, how do we know that the bridge is 36% complete? We don't know. I couldn't go out to the engineering site and see that it's 36%. I could go out there, right? But I can't tell if it's closer to 30% or 6%. I don't know if it's 36. So I'll hire a specialist, an engineer. And I'll say, I need you to come in a month from today and meet you at the client's place, and you're going to go out there and determine, substantiate that figure. And if they can do it, if they get pretty much what the client got, was it 36%? Great. We don't even need to mention that in our report that we used the specialist. In our audit report, we wouldn't even mention it, but we would, of course, document it in our audit documentation that the specialist corroborated the client's figure. But we wouldn't have to mention it in the audit report because it's considered very common to use a specialist. Now, what if the specialist disagreed with the client and said, yeah, they're closer to about 6% than 36% complete? That's a different story. Now that might cause us to lower our opinion on the financial statements from unmodified to something less. Now we would mention the specialist in our audit report. So when we get to reporting, we'll talk about how we might have to change our opinion because of that, and then of course mention it in the report somewhere that the specialist disagreed with the client's assertion on what percent complete. So we changed our opinion. But if everything goes well as expected and the specialist comes in and says, yeah, 36% give or take a couple, that's about right, then we wouldn't even mention it in the audit report, although we would document it in our audit documentation that we used the specialist and the specialist corroborated the figure. So that's just one example of when we would use a specialist. We line them up in the planning stage and use them in the substantive testing, evidence gathering stage. Same thing here. If a jeweler asserts that a diamond ring is worth $200,000 more than cost, the CPA must obtain support. Now, I don't know about you, but I could look at a whole desk full of diamonds and not know if they're real or fake. So if the client shows them to me and says, yeah, this is our inventory and it's worth this much, I'm not going to know if it's real or fake. If they're trying to scam everybody, I wouldn't know. But I know enough to hire a specialist. A gemologist will be able to come out and give us her opinion, you see. So the CPA must obtain support, and then using an outside specialist is very common. So other areas where you would use a specialist: appraisers, actuaries, attorneys, engineers, geologists on slide 71. Any person possessing special skill or knowledge in a field other than accounting and auditing. They're usually not a CPA, but the CPA needs this person to complete the audit. So we hire the specialist, and really the specialist takes over because we can't really reperform the specialist's task. If we could, we wouldn't need to hire them. But we still need to obtain an understanding, on slide 72, of the methods or assumptions used in order to determine whether the findings of the specialist are suitable for corroborating the representations in the financial statements. This means on 73, because the CPA is going to rely on the work of the specialist, the CPA must check the person's professional reputation as well as independence from the client company. So if this specialist happens to work for the client or know the client very well, this would impact the credibility of the specialist's findings. Now on the exam, the specialist is not required to be independent, but it would impact the credibility. If we happen to have a specialist that's not independent, we want to know that because that's going to impact the credibility of the findings. And of course, we should inform the specialist why we're hiring her. We need you to come down and check out some diamonds and see if they're real or fake. So we inform the specialist of the intended use of the work. And then, any questions so far? Okay. All right. So the CPA is going to ask the specialist some questions like this. Please disclose to us all assumptions and methods that you had to use. So how did you determine that the bridge was 36% complete? The client determined that it was. How did you determine that it was? That's what we want to know. Not that we're going to be able to reperform the task. We can't, but let's ask the specialist for the assumptions and methods so that we could document that in our audit documentation, as well as any uncertainties in the findings. So what if the specialist comes back after looking at the diamonds and saying, I'm only 90% sure that they're real. I'm not 100% sure. Well, the CPA needs to know that. Now, if they're 100% sure that they're real, then that's great. But if they're only 90% sure and they're a specialist, we need to know that, and that's why we're going to ask the specialist to disclose all assumptions, all methods, and any uncertainties in the findings. Because in the end, we're still taking the risk here, giving an unmodified opinion if they're only 90% sure rather than 100% sure. So we want to know if they have any limitations, any uncertainties. Now, do we mention the specialist in the audit report? If, as a result of the work performed by the specialist, if the auditor decides to add language or change the audit opinion, the auditor may refer to the specialist in the auditor's report. Otherwise, don't refer to the specialist in the auditor's report, since it's implied that an auditor will sometimes hire a specialist. So what are we saying on 76? If the findings of the specialist do not lead to any change in the audit report, so if the client says these diamonds are our inventory and they're real, and the specialist says, oh yeah, they're real, then there's no change in the audit report. There's no need to mention the use of the specialist. But if the findings do result in a change in the wording of the audit report, then the auditor can mention the work of the specialist and can even name the specialist. So here's when you would mention the specialist on 77. If a specialist causes a change of opinion from unmodified to anything less, then it would be appropriate to mention the use of the specialist and even possibly the name of the specialist. Otherwise, if the opinion's unmodified, no mention of the specialist in the audit report. But the auditor would always document the use of the specialist in the audit documentation. So documenting the use of the specialist no matter what. Yes. But mentioning the specialist in the audit report, hopefully not, because then that's bad news. Right? The minute we have to mention the specialist in the audit report, that's bad news. That means we got something we didn't expect. All right, let's go to 78. Which of the following statements is correct about the auditor's use of the work of a specialist?
I guess one.
One, the auditor is required to perform substantive procedures to verify the specialist's assumption. Now, we're not capable of that. We can't double check the specialist that the specialist did the job well. If we were capable of that, we would bypass the specialist and just go out to the bridge and determine the percentage complete, or look at the stones and look and see if the gems are real or fake. We're not capable of that. And then 2 says the specialist should not have an understanding of the auditor's corroborative use. No, the specialist should know why we're hiring her and what we're going to do with her findings. All right, 81. In using the work of a specialist, an auditor of a non-issuer may refer to the specialist in the auditor's report if, as a result of the specialist's findings, the auditor lowers the opinion. That's when you refer to the specialist. If, as a result of the specialist's findings, you have to lower your opinion from unmodified to something less, that's when you would mention the use of the specialist.
So D. No,
C.
C.
C. If the specialist, you'll mention the specialist if the auditor becomes aware of conditions causing substantial doubt about the entity's ability to continue as a going concern. So if all the inventory of precious gems turns out to be fake according to the specialist, that's when you would refer to the work of the specialist in the auditor's report, because suddenly you've got a going concern issue. '84. Which of the following statements is correct concerning an auditor's use of the work of a specialist? D. Right. The work of a specialist who has a contractual relationship with the client may be acceptable under certain circumstances. That means they're not independent of the client. That might be okay, but it's going to impact credibility. It means we might have to do some other testing somewhere else to get our final piece of evidence here. We can't rely too heavily on this if it's not an independent specialist, but we can still use a specialist who has a contractual relationship with the client. Notice B is wrong. The auditor need not obtain an understanding of the methods and assumptions used by the specialist. Hey, just because we're not going to reperform the task, we still need to obtain an understanding of the methods and assumptions used by the specialist because we have to document that in our audit documentation. So yes, we need to understand that. 87. Which of the following statements is correct about the auditor's use of the work of a specialist?
C.
Right. The auditor should obtain an understanding of the methods and assumptions used by the specialist. B is out. The auditor is not required to perform substantive procedures to verify the specialist's assumptions and findings. That's what the specialist is doing. They're performing substantive procedures to verify the client's assumptions. Best answer is C. 90. An auditor who uses the work of a specialist may refer to the specialist in the auditor's report if what?
C.
Sure. If the auditor modifies the report because of the difference between the client and the specialist valuations of an asset like inventory, like the precious gems. Client says they're worth 200,000, specialist says they're worth more like 2,000. Then we better modify our report. But B, if the auditor believes the specialist findings are reasonable in the circumstances, no reason to modify the audit report. But we would include it in our audit documentation that we hired the specialist and the specialist findings agreed with the client. 92. Which of the following statements is correct concerning an auditor's use of the work of an actuary, that's a specialist, in assessing a client's pension obligation? So this is just any specialist question. They plugged in actuary here. But if this just said which of the following is correct concerning an auditor's use of the work of a specialist,
I would say A.
yeah, you still need to understand the objectives and the scope of the specialist's work. B is wrong. The client is not required to consent to the auditor's use of the actuary because this is part of our audit. We pick the procedures. We don't share our audit plan with the client and say, hey, would you please approve of all these procedures that we plan to do? No, that's not going to work because that would hurt independence, right? We need to be independent of the client. We can't be asking them to share our judgment as to what procedures are required. And then see if the actuary has a relationship with the client. That means the specialist has a relationship with the client. The auditor may not use the work. No, they could still use the work, but it might impact credibility. All right, how about 95? Which of the following is true about the auditor's use of an internal auditor and a specialist? Put it all together today. Which of the following is true about an auditor's use of an internal auditor and a specialist?
C.
C, the auditor must assess the competence of both the internal auditor and the specialist. You got to make sure this person really is a specialist. Why are you choosing them? Who's recommending them to you? How do you know that they're a specialist? You got to check their credibility as both a specialist that's competent and objective. And you would do that with internal audit as well, we said. How about A? A specialist may be related to the client, but an internal auditor may not. No, that's ridiculous. An internal auditor works for the client. What about the sharing of responsibility? Look at D. The auditor may share responsibility for the audit report with a specialist. No, we don't share responsibility for the audit report with anybody. This is our audit report, our opinion. We might hire the specialist, but not because we want to share responsibility. It's just because we don't possess the skill to do a certain substantive test or two that we think the specialist could help with, but we're not sharing any audit responsibility with them. We're still responsible for our opinion, whether we use a specialist or not. So we know on the audit exam, they're always asking these kind of puzzle questions, and they'll say, which of the following procedures would an auditor most likely include in the planning of a financial statement audit? One says determining the extent of involvement of a specialist. Yeah, we'll do that. We'll determine the involvement of a specialist in the planning stage. So that choice answers the question. Number two says examine documents to detect illegal acts having a material effect on the financial statements. We're going to do that too in the audit, but we're not going to do it in the planning stage. So this is an example of the audit exam and a word game that they play where the wrong answer looks right, but it's right for a different question, but wrong for this one. Because the question asked about the planning stage, what stage of the audit would number two be done in? Evidence gathering stage. That's where we examine documents to detect illegal acts. It'll be done, but not in the planning stage. All right, so we said that we're only going to give reasonable assurance, and that's what audit risk is all about. The idea that if we're able to reduce audit risk to a sufficiently low level, then we can provide reasonable assurance. The reason we can't provide perfect assurance is we're not doing all the testing. We're not testing every transaction or every account balance. And even the testing that we are doing, some of it's being done by maybe a specialist. So not that we're sharing responsibility with that specialist, but at least we're saying that there is a chance that we give the wrong opinion because we're only here to give reasonable assurance. If we can reduce audit risk to a sufficiently low level, then we can provide this reasonable assurance that the financial statements present fairly in all material respects, operations, financial position, cash flows, in accordance with the framework. And so now our job is to go on to audit risk. Now we got to start talking about audit risk, inherent risk and control risk. Hey, it's Darius. Thanks for checking out what my students have dubbed the Audit Video Bundle. Get the complete audit video bundle, and then you'll get all the videos you need to pass the audit exam. But don't just take my word for it.